I'm up $1,700 trading the US dollar. Let's talk about this really straightforward trade. Although it's counterintuitive, the dollar actually bottomed out when the Fed announced a rate cut, and that can be very confusing, but let's explain it. First of all, if you're a currency trader, you have to know that currencies are all compared to one another. Even if all currencies and all economies are showing weakness, it's about which one is showing the least weakness at this time relative to what people thought. So yes, although people are expecting rate cuts for the US, they're also expecting rate cuts for other places too, which are bearish for those currencies as well. Here's a look at GDP growth, and you can actually see we've had some really strong prints for GDP growth quarter over quarter from the United States. For Q2, we saw 3.8% growth for the US economy. And if we compare that for Europe, you can see it's pretty much flat to no growth. Here's a look at the UK, and you can see it's a similar story. Same thing with Canada, and we also see modest growth for Japan. And when we compare the dollar versus some of its peers, our system is detecting some bullish outcomes for the dollar are likely based on sentiment, technical data, and economic data, which we sort of just highlighted. So once we started bottoming out on the dollar, I looked to buy the dip, and essentially that is where I entered, right around this area. To get long the dollar, I chose to buy the basket, or UUP, which is an ETF that tracks the dollar's performance. My short-term target on the dollar was a move up to 98.50, but we've already taken past that level. I would not be surprised if we're going to head back and test this area around 100. If you're interested in exploring the Edge Finder, check the link in my profile.